Welcome to a special edition of BloombergWest live from Dreamforce. I'll be speaking with Salesforce CEO Marc Benioff coming up. The Fed leaves rates unchanged, what it means for technology. Plus, InsideSales is here, a real-life unicorn with new predictive technology. And we talk Salesforce philanthropy. I asked Marc Benioff if Uber has a heart. First, though, to our lead, the biggest story of the day, the Federal Reserve delaying a long-awaited decision to raise interest rates. What does it mean for technology? I want to bring in Bloomberg Intelligence's chief U.S. economist, Carl Riccadonna, who joins us from New York, our editor-at-large, Corey Johnson, in San Francisco at home base. But, Carl, I want to start with you. Give us all the details. What happened today?
Good afternoon. Well, the Fed was getting very close to pulling the trigger on interest rate increases late in the summer. However, when China devalued the currency and the turmoil erupted in global financial markets, the Fed lost faith that the timing was appropriate. And so instead, the Fed is waiting to see the extent of negative feedback into the economy over those events. And so they need to wait a little bit longer before raising rates. They still have an objective to raise rates this year. It's not to guarantee that they will deliver, but they're watching to see the extent of feedback. And the recent signs give them reason for pause. Last week, we saw consumer sentiment much weaker than expected. New York Empire survey was softer this week. The Philly Fed survey this morning showed a pullback in business sentiment. So there are signs of this negative feedback loop. Now, as we look at the bigger picture, I think that the feedback loop will be more of a hiccup or a sneeze than something more severe. And that means that later on in the year, the Fed will be able to proceed.
Carl,
so, Corey, what does this mean for technology? Technology has been, considered like a safe haven investment. Amazon, for example, one of the best performers in the S&P.
Yeah, well, I actually want to ask Carl that question. I mean, Carl, this is the tech show. We don't care about your Empire State survey. We know they sell manufacturing goods out of the Empire State and out of Canada as well. What do we know about, how technology has impacted the thing the Fed's looking at maybe the most, which is inflation?
Sure. Well, that's a big question mark for the Fed. The Fed has this dual mandate of full employment and price stability. In terms of full employment, we're getting very close to the level that should be consistent with starting to see some wage pressures in the economy. On the inflation side, the Fed is broadly missing the mark. Headline inflation running at about 0.3% year on year, way off the Fed's 2% target. And core inflation has also shown some signs for backsliding. So it's a confluence of factors here. It's a tech show, so I will say part of that is a productivity story. Things like Uber and ride sharing and all of the online conveniences, navigation systems, all of this is leading to productivity gains in the economy, which means we get more output with less input. And so, this is restraining inflation pressures. That's the tech side of the story. The old macro side of the story is that energy prices are falling. That's percolating into the broader economy. And also the dollar is extremely strong. And that means import prices are plunging. And that percolates back to consumer shelves as well.
But let me push back a little bit on the productivity
Corey, how do you
thing.
expect this to impact something like the IPO pipeline, Corey? How do you think this will impact something like the IPO pipeline?
Sure. I mean, look, as long as the Fed is keeping rates at these historic lows, like zero, investors are always going to be pushing for some place to find yield. And if they can't find yield buying established companies that consistently generate free cash flow, they're going to push out on the risk curve and look for companies that are unproven. Look at IPOs, look at venture capital money. And I guess, Carl, that makes me wonder also. I mean, last time around in the dot-com bubble, we saw big increases in productivity that in retrospect weren't big increases in productivity. They were spending by tech companies fueled by the IPO market, and that looked like there were productivity increases, but they weren't. Is it possible that the productivity increases we're seeing right now are big spending by these private companies that have unicorn multi-billion-dollar valuations, who are spending a lot on real estate, who are spending a lot on IT goods, but maybe those aren't long-term changes in productivity. It's just a short-term spending by flush tech companies.
All right, Corey. Corey Johnson, our editor-at-large. We'll have to leave it there. Bloomberg Intelligence's chief U.S. economist. Obviously, a lot to talk about. Carl Riccadonna, thank you so much for joining us from New York. I do ask Marc Benioff what he thinks of the Fed leaving the rates unchanged coming up, how it impacts Salesforce. Our full conversation coming up. Welcome back to a special edition of BloombergWest, live from Salesforce's big annual conference, Dreamforce. I'm here now with InsideSales CEO Dave Elkington, and InsideSales is a real-life unicorn. $1.5 billion valuation.
Or stallion.
Yeah, you don't like being called
like
a unicorn.
The unicorn moniker.
You prefer being called a stallion.
Unicorns die easily.
But why are you guys here today? You just presented on stage, and you unveiled some new predictive technology.
Yeah, so the event's amazing, right? It's become something, honestly, larger than just a Salesforce event. It's become an industry event. There's over 170,000 people here. And for us, this is a great venue to be able to connect with our customers and share new products. So our newest product is our Predictive Cloud. And our core technology is a tool that uses predictive analytics and AI to automate the sales process, to do smarter, sell better, sell faster. What we did is we put an API on top of our learning engine, Neurolytics, and we allowed other companies now to then go build predictive systems, really very diverse. Like we have a company called Event Board. They're a meeting room management platform. We're allowing them to do smart meetings, which means people can now, we can predictably tell them what time of day, what day of week, who should be attending the meeting, even what room in the building they should be in. We have another example that's kind of out of there, but a company called Cloud Craze. They're a B2B enterprise shopping system, and we're providing really all of the advantages, the predictive capabilities Amazon has to almost anybody. So it's really the commoditization of predictive analytics.
Now, we're seeing sort of major tectonic shifts happening in the enterprise software world. Oracle reported yesterday they're not moving to the cloud as quickly as some would have hoped. Where do you see this? Where do you see this going? Where do you see, the hierarchy of enterprise software companies? So
it's interesting. I've been speaking with a bunch of the legacy folks who are, in fact, I won't say who they are, but a very large.
But please do.
But a large company that is just splitting into two. I won't say who it is. And they were really excited that they're getting some of their applications into the cloud. And I'm like, really? Like you're excited that you're finally getting your applications into the clouds. Same thing with Oracle. Why is it taking Oracle so long? Like they're so far in the rearview mirror. So what I think is happening is, I think there's a new emergence of, we'll call them unicorns for your sake, that are really supplanting those old school companies. So the reason why we're seeing such huge valuations in these smaller companies like mine are because we're building new value for customers that the old legacy companies can't do anymore. And so it's not that we're actually creating a net new value, though some of that's happening. More than anything, we're seeing the value shift from these legacy companies and moving into these newer, smaller companies.
But how many of these unicorns are going to make it?
We've talked before. Not all of them, right? And I kind of think that's a great thing. Like, it sounds terrible, but I think I mentioned before, you can't grow a forest without a forest fire. I think some of them will emerge, and the ones that will emerge are going to be the large enterprise companies, or the companies that are enterprise. They've got long customer contracts. They provide real customer value. The companies that honestly are valued based off of user count or based off of click traffic, I just don't think that they're going to last.
All right. Well, we'll be watching you, Stallion. InsideSales.
Excellent.
InsideSales CEO Dave Elkington, thanks so much for joining us today here at Dreamforce.
Excellent.
We'll be right back with more of BloombergWest coming up. Stick around. Welcome back to a special edition of BloombergWest, live from Salesforce's Dreamforce conference in the heart of San Francisco. I want to get straight to our editor-at-large, Corey Johnson, at home based, who's got the BWest Bite today. Corey?
All right, thank you very much, Emily. Today's BWest Bite, one number that means a whole lot. Today's number is 1. It's $1. Chicago proposing a new $1 tax on all ride-sharing services in the city. That's not all. During Uber's surge pricing, for example, when those services increase prices to take advantage of demand, the tax rises not from 1, but to 2, just twice as much as 1. The proposal is part of a larger package of tax increases that Chicago says will take effect in 2016 if passed. It will be the highest ride-sharing tax in the country. Chicago hopes it'll bring in $70 million a year for the city. I'll back to Emily over at Dreamforce.
All right,
Emily?
Corey Johnson. Thanks, Corey Johnson, our editor-at-large with the BWest fight there. I want to get back to Salesforce's Dreamforce conference. I'm here now with Suzanne DiBianca, president of the Salesforce Foundation. Obviously, we know that philanthropy is hugely important to Marc Benioff, hugely important to Salesforce, and you're the person who's in charge of making it all happen. So tell us about all of the charitable giving efforts that are underway here. I gave books to the book drive.
Thank you.
But there's other stuff happening, too.
Yeah, thank you, Emily. It's great to be here. It's been a fantastic week at Dreamforce. Our values really are innovation, fun, and giving back. Giving back has been incredibly important to the culture of our company, to Dreamforce. We've raised 1 million books. We've raised $10 million for the Children's Hospital. I just ran into a group of girls from Black Girls Code who are here banging out on apps in the developer zone. We have 500 kids here this week. It's just been a fantastic week. We have also 700 veterans that have been here for career mentoring. Mm-hmm. Tomorrow's our environmental day. Mm-hmm. And so every day has got a theme here at Dreamforce that is aligned to our charitable mission.
Now, Salesforce has championed the 1-1-1 model, whereby companies give 1% of their time, resources, equity to charity.
That's
right?
Yep.
And you've been trying to get other companies to do this, other technology companies. Some have, but the majority still are not doing that. What are you doing to try to convince them?
Well, I'd just like to note that we've had some really big wins this year. Exactly was a Pledge 1% company. Twilio just announced this week that they've gotten 1% of their equity and they've moved it aside and they're taking up Twilio.org. So there's been some great wins. We've had 400 companies that have taken the pledge this year. I think really it depends on the CEO. Do they want to build a great company and attract great talent or not?
I asked Marc why he thinks companies aren't doing it more, and he says he thinks they're afraid.
I think they also don't know what to do. Part of the Pledge 1% initiative is to take the myth out of the fact that it's hard to do philanthropy. It's really not hard. You can take one strategic project and go deep. And that's a really great way to get started.
So what is your argument to, for example, an Uber who this week is giving $1 of every Uber ride to San Francisco schools, which I think is fantastic, but it stops at the end of the week. How do you convince Travis Kalanick, you need to do 1-1-1, you need to do more?
Well, what's really powerful is when you make it structural. So at some point, Uber will have a big IPO. If they take 1% of their equity and they put in their foundation, just like Yelp and Workday did, they'll generate hundreds of millions of dollars on that first day. Also, they can put it into their new hire orientation so that every employee, every driver that starts with Uber knows that it's a really important part of their mission. All
right, Suzanne DiBianca, president of the Salesforce Foundation. Very important work that you do. Thanks so much.
Thanks, Emily.
For joining us today.
Thank you.
Now, we do have that interview I did with Marc Benioff, the CEO of Salesforce, moments ago. Take a listen to what he had to say.
Well, our main message is it's time to experience a whole new level of customer success. For all of these amazing companies who are here from all over the world, they have the same problem they're trying to solve. They're looking to connect with their customers in all these exciting new ways. I mean, I was just downstairs in our trade show and I saw toothbrushes connected to the internet and light bulbs connected to the internet and thermostats connected to the internet. And these companies that before were somewhat abstracted from their customers are all connected in this amazing new way. And so we're all learning how to manage these customer relationships in this magical framework, that we call the Internet of Things.
165,000 people at Dreamforce, right? This is something that you invest a lot in. You're very personally invested here, too. How many new customers do you get as a result of Dreamforce?
Oh, this is a major opportunity for us to educate our customers and build what we call our pipeline. So we have a multi-billion-dollar pipeline here. And
what do you mean by that?
Well, what I mean is that there are billions of dollars of opportunity for Salesforce and our partners and our customers here. And then our job is to take that pipeline and turn that into sales and revenue over the coming year.
Now, Oracle reported earnings yesterday, and we saw that they're still struggling to get their customers to the cloud. Do you even consider Oracle a rival in the cloud anymore?
Oracle's just paying a price for being a cloud denier for too long. I mean, instead of saying the world is changing or the world has changed, that the world is going into the cloud, the world is going social, the world is going mobile, the world is moving into data science and analytics and into the Internet of Things, Oracle's message is the world is not changing and you just need to buy more Oracle databases. And that's why Oracle is paying a terrible price, that they don't have products that customers want. So when you look at those revenue numbers, they are really pretty bad.
So on that note, Oracle likes to point out that Salesforce runs on an Oracle database, yet your marketing cloud runs on Microsoft technology. Is Salesforce moving away from Oracle?
We have a lot of databases. There's a lot of amazing database choices in the world today. That's one of Oracle's challenges. Of course, we have SQL Server, we have Oracle, we have open source databases. Oracle is a key provider to us of technology, as is Hewlett-Packard, as is Dell, as are many companies. But for our customers, that doesn't matter. We abstract that from them. They don't know what we use. They don't need to know. All they need to know is that we're going to help them connect with their customers in a new way, and that our technology is delivered as a service right over the internet. And so that's the magic of Salesforce.
So let's talk about Microsoft. Satya Nadella was here. Obviously, now you guys are partners, though nobody would have expected it, because you do still compete. How do you describe your relationship with Microsoft?
Oh, we have an amazing relationship with Microsoft. You probably saw yesterday they announced that they are using our brand new IoT cloud, which is built on our Thunder platform, to manage the relationship between their customers of their new product, Office 365. So they've chosen Salesforce to manage their customer relationships. That's very exciting. And as you mentioned, we're also a customer of Microsoft's. We use SQL Server in our marketing cloud. We're also very good partners. I've been in their keynotes this year. They've been in our keynotes this year. And we're also competitors. Right. We have some competitive technology. It's a very complex relationship, but it is really working well.
Would you say frenemies? I mean,
you could say frenemies. You could say a lot of things, but when you have, we're looking at Microsoft, the #1 software company in the world, and next year Salesforce will be the 4th largest software company in the world. Only Microsoft, Oracle, and SAP will be larger than Salesforce next year, and then I think we'll pretty soon be the 3rd largest software company in the world, first by market cap and then by revenue.
Now, the last time we sat down, I asked you, do you really want to sell this company? Is all that stuff true? And you said you're more excited about Salesforce than ever. So where do you see Salesforce and Marc Benioff in 5 years?
Doing exactly what I'm doing right now in this present moment, which is making our customers successful. Just look around. Look how happy all of our customers are. You could just go to our trade show. We have 400 other software companies, including Microsoft, presenting downstairs. We have keynotes. So we had 15,000 people in our keynote room yesterday, 10 million online. As you mentioned, we have 175,000 people registered to attend our conference. We're going to have a concert tonight. I hope you'll come with the Foo Fighters, with 50,000 people tonight. And this is amazing. It's way beyond our wildest dreams. But at the end of the day, it's just about helping our customers be more successful with their customers in these exciting new ways.
Now, when it comes to Salesforce's growth, things have slowed down a little bit, right? It had been 30%, now it's more like 20%.
Look at the size that we're talking about.
Okay, so what should we expect going forward, and how do you maintain that kind of growth? Like, how important are partnerships like what we've seen with Microsoft going to be to your future?
I'm really committed to being the fastest growing enterprise software company to $10 billion in revenue ever. No one has ever grown faster than we've grown to $10 billion in revenue. And the way that we've done it is to invest. We've invested ahead of our revenue in terms of salespeople and marketing people and customer success programs and all the things that we need to do to be ready to be a great $10 billion company. And that's what I'm really focused on. And that's what I'm really excited about. We even have a cruise ship this year because we've run out of hotel rooms.
I know.
Did you know
we went out there to shoot it, the Dreamboat.
Yeah, and Airbnb has maxed out their space this year, and Uber added 1,500 more cars onto the road this year. I mean, it's amazing.
So I want to ask you about the Fed because they decided to leave rates unchanged today. What's your reaction to that? How does it impact Salesforce? What does it mean for M&A?
I don't think it impacts us really at all. I mean, you look at the people behind us, you go talk to these customers. They're excited about the future. They're excited about innovation and the changes that are happening in our industry. Our industry is an exciting industry. Our customers are asking for more people to come into our industry so that they can get jobs to help them be more successful with our products. And that's what I'm mostly focused on. I don't think the interest rate situation is a major issue. I think, you know, we're focused on, of course, the macro global economic issues, but in the cloud, that's the fastest growing part of the IT industry today.
So are we going to continue to see Salesforce making acquisitions? And
oh, I hope so.
You know, you unveiled something yesterday focused on artificial intelligence. Is that a potential area?
That came from a great acquisition. So we did an amazing. We've bought, I think, 2 or 3 dozen companies now over the past 5 years. And the number one thing that we get when we buy these amazing companies is the amazing people.
Right.
All these entrepreneurs and all these ideas that we would have never had if we didn't buy these companies. And we announced the brand new Salesforce IQ Cloud yesterday. You can get that now in the App Store. You can also log right into salesforceiq.com and set up your small business. It's CRM for small businesses. For our enterprises, they can use it right on top of our existing Sales Cloud, which is so cool. That came from an amazing acquisition we did last year. Then we refactored the technology, we tripled the team, and then we rolled it out at Dreamforce. That's a successful acquisition.
Now, I recently spoke with Chuck Robbins right here, and he's the new CEO of Cisco. He says he sees mass consolidation coming to the technology industry. Meg Whitman at HP has told me the same thing. We just saw HP lay off potentially 30,000 people. Do you see mass consolidation? Where is all this going? You wonder what's happening.
I don't see mass consolidation.
Really?
You know, what I see is mass innovation. And there is more innovation happening in our industry today than ever before. There's more new companies getting created than ever before. I know, even without talking to you, that your phone is off the hook with people calling you, wanting to get on this show to talk about their incredible new company.
You would be
probably
right
at a greater level than ever before, would I say?
Yes.
This city, San Francisco, is sold out. There's no commercial real estate. Mm-hmm. There's more new companies that have been created here in the last 3 years than in the history of the city. So you look at a world of mass innovation. Now, when you have all these new companies getting created, well, then what's bubbling up is all these great companies like Salesforce and others that are redefining our industry. So those existing legacy players like Hewlett-Packard and Cisco, who are great companies, and by the way, great customers of Salesforce, they're redefining who they are, and that's completely appropriate in this world.
Salesforce CEO Marc Benioff there. You can catch our full interview online, including his comments about Uber. And that does it for our special live edition of Bloomberg West from Dreamforce.